Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock with news markets are quiet after the US Fed monetary policy review and results. As expected, the Fed made no change. Wall Street continued its earlier slippage after the release, and the US Treasury 10-year yield benchmark rose and the US dollar firmed marginally. Earlier US mortgage applications were a little softer last week through the Washington swamp burp, down 2%, and the benchmark 30-year interest rate stayed just above 7% and little changed as lenders assess the risk implications. Both wholesale and retail American inventory levels fell in the latest accounting out overnight. But as expected, the American trade deficit rose sharply in December as traders rushed to beat the aggressively signalled tariffs threatened by the incoming administration. Imports jumped. In fact, they're up 15% higher than the same month a year ago. The biggest increases were for food, industrial supplies, and capital goods. Imports of vehicles actually fell. Substituting these for local supply, which seems to be the plan, will probably create distortions that will be inflationary. In Canada, they have already announced their rates decision earlier today, and as expected, they cut 25 basis points to 3%. They face the same pressures from their neighbour, but from the other side. They also signalled they're no longer reducing their balance sheet, so the end of their quantitative tightening program. In Australia, there were some mixed signals in their fourth quarter CPI data released there yesterday, along with their monthly inflation indicator for December. The fourth quarter CPI rate fell to 2.4% from 2.5% in the third quarter, and slightly better than expected. However, underlying inflation fell only to 3.2%. But the monthly inflation indicator rose to 2.5% in December, up from 2.3% in November and 2.1% in October, and actually the highest in 4 months, so tracking the wrong way. Markets, however, focused on the good quarterly result, anticipating this will open the door for an RBA rate cut on February the 18th. But you have to wonder if that is actually how Bullock and her team see it. The US Treasury 10-year yield is now at 4.59% and up 3 basis points from yesterday after the US Fed decision. And the price of gold will start today at $2,752 an ounce and down a minus $6 from yesterday. Oil prices are up 50 cents at $73.50 a barrel in the US, while the international Brent price is now $77.50 a barrel. And the Kiwi dollar is now at 56.5 US cents and down 10 basis points from this time yesterday and softening. Against the Aussie, we're up 20 basis points at 90.8 Australian cents. Against the euro, we're little changed at just under 54.3 euro cents. That all means our trade-weighted index starts today at just under 67.1, and also a little change from yesterday. You get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.